Good morning, ladies and gentlemen. I hope you are doing well. Take a moment to pull yourself back from the keyboard. We're going to go ahead and get right into it. I got my friend Alex here. He is the CEO and founder of GoNoGo Charts. Now, typically we have Tyler on talking a little bit here, but this time we're going to get a little bit different perspective of how things work using such a similar tool with everything. Using the same tool, not a similar tool, the same tool overall. So Alex, I want to turn it over to you here. The SPY has been an interesting thing to work with between debt ceiling conversation, a little bit over there with OPEC causing some debacle through things, and the currencies just being what they are. Would you mind educating us? What are you seeing in the charts, and how are you using GoNoGo to be effective within your trading?
Yeah, absolutely. I mean, we as technicians, we like to talk about reading the price chart and putting everything else in the background. And like you were just mentioning, some of the stories that are coming out, the doom and gloom that's being predicted, and you've got to sometimes take a back seat from the headlines and look at what the markets are telling you. And as you know, we use GoNoGo charts, which is a concept where we blend multiple tools and foundational concepts of technical analysis into something that color codes price bar based on the strength of the trend. And where we are at the moment, we are still in a go trend. We're painting go colors. They've weakened a little bit. You can see here on the right side of the chart, we've come away from this recent high and we're painting the aqua color, which is the weaker form of the go trend. But with all of the news and all of the impending disasters that we're talking about, we are hanging on to this go trend. And you can see that we are higher than these previous lows. We just made this slightly higher high, and we're going to look to see now if we find some support. There's definitely some support here on the chart. What we like to do, though, is turn then to the oscillator down at the bottom panel. And I know that Tyler's seen this, showed this before as well. And we look to momentum to see if that's dried up or what's happening in terms of market participation. And what we can see is that we are at a very critical level. We use the zero line here as an objective level that should act as support in a go trend. And so we're testing that level again to see if we can get some resurging momentum in the direction of the trend. If the oscillator bounces off zero, stays in positive territory, then we'd look for price to try to test these highs. So at the moment, a couple of rough days this week, but today we opened higher. We've moved a bit lower, but you can see how we're still what looks like putting in that slightly higher low over the last couple of days.
You know, Alex, and from a TNA perspective, was talking with Anne-Marie beforehand on this one on a monthly view of things. We're starting to set in for that symmetrical triangle now, being technicians on that, and we're seeing some weakness in the GoNoGo. The monthly's giving us a symmetrical triangle, and seems the world's on fire again for the 50th time this year. You know, noise aside, would it be amiss to say that we may be looking at possibly putting in some lows for the year on this? I'm not saying a sell-off or anything like that, but maybe getting back to where we were on the open of the year, back into that 38, 3900s area on the ES. What are your thoughts with that?
Well, first, I think it's fantastic to pull in multiple timeframes. So I think that, you know, I'll show a weekly chart here in a second as well. But what we are looking at is for this zero line to hold on the oscillator and the trend to continue to paint go colors, right? As long as that's happening, then the weight of the evidence for us tells us that we are still in this go trend and momentum is fluctuating between positive and neutral. What if what you're talking about is likely to happen, we'll see this oscillator give way at the zero line first, and that'll tell us that momentum will turn negative, just like we did in these other periods of correction here. When the oscillator fails to hold as support, when in a go trend, then that leads to a lengthier and more deep correction. So that's what we need to see first before we would likely see that happen. We will see the oscillator break below zero, and then that in turn would probably lead to color change in the trend indicator and a deeper correction. If the oscillator is able to hold this zero level, then we would still say that we're okay in this go trend. What's interesting, you mentioned multi-time frames. We were always looking at multi-time frames. And the weekly chart of GoNoGo is still in a go trend as well. So when you're lining up these time frames, yes, there's a bit of a triangle happening on the monthly, but the monthly will also be in a go. So until we see that breakdown of momentum in the oscillator, we're hanging on to these go trends. Now, of course, The weekly allows us to see the obvious overhead resistance at this prior high from August of last year. So that's hanging over as well. So we may well struggle, but we were talking at the CMT symposium a couple of weeks ago. We may just be in a bit of a range for a while and not able to significantly break higher or really or do too much damage to the downside. So jury's still out, but we'll want to see color change. And on the shorter time frame chart, this oscillator breaking below zero would tip us off to a deeper correction to come.
I like it. I like it. I want to pivot with you a little bit on this one. Would you mind to bring up NVIDIA? That seems to be on everybody's talk today with that 3x expected move coming through. They closed at 305 and opened up just a hair below 400. That was a pretty good move on them there. What was the GoNoGo chart showing as they were preparing for the earnings move?
NVIDIA has been a great chart for us, for the whole year. We saw the Go trend come in at about 165, 166. And this is what we're talking about with the GoNoGo oscillator acting as giving you the ability to stay with a position. I think that's one of the hardest things to do is to stay in a trade. We see a lot of people saying, "Oh, should I get out in NVIDIA?" We've gone from 165 to 265, and then I see some sideways. Should we get out of NVIDIA? Well, as long as we're seeing the Go trend remain in place with these blue and aqua bars, and as long as the oscillator is holding the zero line of support, we would say we'll look for trend continuation. So you can see as this Go trend developed, when the oscillator comes down to test the zero line, if it finds support, we get these green circles, and those green circles, I'm sure you know, are trend continuation icons. So throughout this move, we've been seeing trend continuation, even as the price moves sideways here for several weeks. It didn't fall out of the Go trend, and we were getting these trend continuation icons. So we were in this Go trend, and then of course, like you said, this move, this gap higher today, that was really quite something.
It was, and it seems they're going by the gauge there on the bottom that we're getting a nice little push up there. It's starting to hit into the fives there. Typically, when we're working with the oscillator there, now, is it a lot like the RSI or anything like that, to the aspect to where it may range in an upper area for a while before we start to see a dip down? Like, does it maintain a constant? How do you really go about reading the oscillator there?
Yeah, fantastic question. I mean, and that a lot of people may have made their hay by buying overbought conditions, right? Technical analysts are looking to buy high, sell higher. That the thrust of momentum is often a good thing. So when the oscillator gets up into these higher readings, it's not necessarily a time to sell. And what we like to look for, you can think of it like an RSI or a stochastics, where when we get into these overbought levels above 5, when we see it break below 5, we will give a signal on the chart. That's these red arrows that suggest in the short term, perhaps some struggles for price to go higher. You think about that as a mean reversion kind of idea. So if you were needing to take some profits, these would be fairly sensible places to do it. Because in the traditional sense of an oscillator, when you go overbought and then you come back to neutral, that's a traditional sell signal. But what we really look to with our oscillator, and I did a lot of, I got fascinated by the works of people like Connie Brown and others when they were talking about oscillators ranging, like you said, in that positive area for a long time. And that's what we see in strong trends. Something like an RSI will go up to 80 and then it'll come back to maybe 40, 45, but it won't go oversold very much. And that the problem with that is it becomes subjective. Where do you find those levels? So when I calculated the oscillator, I wanted to do it in a way where that zero line became an objective way of doing just that. So yes, it'll stay in positive territory throughout a Go trend, and that's what you're looking for. It'll go overbought, but then it should find support at the zero line. If you're seeing any kind of negative readings, then that suggests a more drawn out, more lengthy correction. So what you're looking for as a trend follower is a trend to be established, which we look to the trend colors, and then for the oscillator to continue to find support at the zero line. That'll allow you to scale into positions, size up, perhaps participate in something where you maybe missed the beginning. Interesting side story. I was talking to a friend years ago about Bitcoin when that went crazy and it went from 9,000 to 18,000, and he was saying, I've missed it, I've missed it, I've missed it, and and we're saying, well, the trend is in place, and that's when people talk about buying the dips, and we want to try to automate that process by using these trend continuation icons, and we were getting trend continuation icons at around about 18,000, which is obviously still a long way to go, where we went all the way up to 60,000. So I think that using an oscillator, whether it's RSI, whatever it is, to find those ranges that they trade in when a security is trending can be super powerful. And for us, it's just using the zero line.
I love it. I love it. All right, Alex, I want to be respectful of your time overall. I got one last question for you. Who was the most impactful influence for you to start into this? Because no one just kind of starts and says, hey, I want to, code up an oscillator. What was the trigger? What was the most impactful aspect for that?
Well, I worked at Bloomberg for about 13 years. And when I sort of went down my specialization path at Bloomberg, I just got fascinated with technical analysis. I'd done some research prior to that on data visualization. My dad had worked with IBM back in the 60s and talked about the big machines that were, in London, that they had to plug in numbers and out came some kind of card that was sort of magical information. And so the idea of using visuals to simplify somebody's understanding of market dynamics was always really exciting for me. And so technical analysis was the obvious area to specialize in when you're looking at financial markets. And in terms of first influences, I mean, the old stuff, the books by Edwards and McGee about pattern recognition and looking for triangles. I remember in the early days, that movie, I don't know, you're probably too young, but the Sixth Sense movie where the kid says, I see dead people. I used to do training classes and I'd say, I see triangles. Like once you start looking at the charts, you can see the market dynamics of supply and demand playing out in the form of support, resistance, trend lines. Call them whatever you want in terms of the names of the specific patterns, but you can see buyers coming in, moving the lows higher, sellers combating by selling earlier, and that's what causes a triangle, And so the fascination I had with just visualizing market dynamics was my sort of initial reason for getting into it. And then, reading the old books, like I mentioned, Edwards and McGee, written in the early 40s, is still valuable today. So I guess that would be how I'd answer that.
I like it. I like it. All right, Alex, I want to sincerely thank you for coming in and dropping some great knowledge today. If people want to learn more about GoNoGo and how they can use it within their trading, both professional and retail on that, how can they get a hold of you guys?
Yeah, GoNoGoCharts.com. You can send us an email, info@GoNoGoCharts.com, but we've got a lot of information. We've got hundreds of educational webinars and videos, like this on the website. So check out the website and get in touch. I'd love to hear from people.
I love it. I love it. All right, Alex, again, thank you sincerely for dropping this great knowledge. Ladies and gentlemen, relevant links in the description below. Alex, I look forward to continuing this discussion and talking with you again on the next one, my friend.
Yeah, love to. Thanks.